All right, what is swing trading and how is it going to help you as a trader consistently profit from the stock market? I am a swing trader myself, and I've been doing it for many, many years, and I've been doing it pretty darn good. But why is it something that most people should consider if they're looking to succeed over the long term in the stock market? And the reason why is that you have day trading, swing trading, and long-term investing. And the swing trading fits right in between those two and really provides you with the greatest opportunity to limit your risk while also maximizing your reward. So let's break that down. When you have day trading, day traders are getting in after the market opens, and then they're closing out their positions before the market closes for the day. So they're really limiting their ability to profit because anything that they take from the market has to happen between 9:30 a.m. Eastern and 4 p.m. Eastern each day, and they can't hold anything overnight because that's not part of their strategy. Now you take long-term investing, and they're taking on a lot more risk because they have to hold the stock for years at a time, and who knows what can happen. You have market influences that can drive a stock market down 10-20% in a given year, and that might result in one of their own stocks going down 30 or 40% in a year. So there's a lot more risk to it, and if you're wrong, you're going to be very wrong in long-term investing because it takes a long time to figure out whether or not that investment decision that you made years back is going to pay off or not. And sometimes they don't, and it can result in a 50 or 60% loss. So investing long term creates a whole lot more risk. And then day trading limits your ability to profit. So where swing trading comes in is it takes the best of both worlds, in my opinion. It minimizes your risk while maximizing your reward. So the key is to lose quickly in swing trading, but to profit slowly over the long term. So that's the difference between swing trading and day trading and investing. Now, the one thing that it also helps you to do is because in day trading, you tend to overtrade a lot, or there's that tendency to overtrade a lot. And so swing trading, because you're looking to build up a portfolio of stocks that you can maybe hold for 10 to 20 days, because let's face it, swing trading, I would say for me personally, I hold a stock anywhere between a few days, if it's not a very good one, up into like a month or so. So the sweet spot is when I can hold a stock for about 2 to 3 weeks or so. That's usually going to provide me a pretty good return on that trade. If I'm only holding it for a couple days, it's not going to be a very good thing. And if it turns into a day trade, we definitely know it wasn't a very good swing trade. So, and it really wasn't a swing trade at all at that point. It was just a bad trade. So the day trading results in a lot of over trading because there's this need to have to like make something that by the end of the day each day, or the day kind of feels like a raging failure, right? So we tend to over trade until we get back into the green, but the more we trade, that tends to be the more we get into the red, and we're digging a deeper and deeper hole. And then all of a sudden you do that enough times over many, many trading sessions, and all of a sudden you're not doing too good on the year. Whereas swing trading, the pressure's not on you to have to make all your profits right then and there. Now, let's take investing, for instance, and let's say you're able to make 100% on a particular trade over the course of, I don't know, let's say a couple of years, right? Great. And let's say you put 10% of your portfolio on that investment. So 10% of your portfolio just doubled. And that's cool too. But the thing is it took a couple of years to do that. Whereas in swing trading, you can make the same return in your portfolio trading with that same amount of money, but trading it many, many times over and resulting in a profit that will equal or even far exceed what you could have made from a long-term investment standpoint. It happens for me all the time, and that's the thing with investing, is that there's a time element that even though when the investment does pay off, you might have been able to do far better in a shorter period of time. So that's another element that makes swing trading such a better option versus day trading or investing. Now, the thing with swing trading, though, is timing is everything. If you're not timing your entries right, you're going to be in a not so good situation, because if you're not considering risk and the amount that you're risking on each trade for your swing trades, then you're just putting yourself in a situation where you may not be profiting enough on your winning trades to balance out the losses on your losing trades, because there will be losses on swing trading. Everybody has them. For me, I'm about 40% wrong, 60% right. Really good equation. I think exactly it's about 58%, but I'm going to round up for the sake of this video. I'm about 60% right, or at least I aspire to that. But to be exact, it's about 58%. So 42% of the time I'm wrong. So the key there is not the fact that I'm wrong. That's not the worrisome part. The worrisome part is if I let the losses on the 42% of my trades that are not profitable become big losers, and I don't. I keep them between somewhere about 2 to 3% on average, about 1.5 to 3% on average, so that I am not taking on a whole lot of risk when I do lose, but then my winners tend to far outpace anything that I experience on the losing side of trades. And so that's important too. And if you're not timing your entries and making sure you're getting in right when the market is breaking out or the stock is breaking out, and you're keeping that risk tight enough to where you know that once the stock goes against you, you know that you're wrong if it breaks below a certain price level that nullifies that trade. So let's go ahead and look at a couple of trading opportunities. I'm going to go look at an older one from this past year, but I'm also going to go ahead and look at a few recent ones. One that I actually got out of today was Bank of America. And Bank of America here, I got in when it was breaking out right above this level here, and then it had another resistance level, this downtrend off of the March highs that it needed to break out above, and it did so, and it did it in a great way. But today it pulled back and it started going back below this level here, and then you have this bearish kicker. So I went ahead and got out for a 1.5% profit. If you're a day trader, that's great. Swing trader, it's okay. It's not a loss. You're still making money, and that's good and everything. So it's an example of not every trade is going to be like this huge cash cow or money maker or something else, but it's just a consistent profit. It's a profit that keeps you in the game and that keeps things going in the right direction. Now you take another trade that I have right now, SPLK, and I got into this one back on July 2nd. And so right around here, point out it right there. I got in right here at about 170 or so, and it didn't really do much for me at first. In fact, the next 2 days that I was in the trade, it actually went down, but it held this trend line the entire time, and that was important, that it not break that rising trend line. And so I stayed in it. I think I was down at one point as much as like 2% on the trade. But finally, it consolidates and gets its act together, and then it just starts pushing higher. And I'm still in it. It was down today, but overall, the trade's still intact. I'm continuing to increase my stop loss, and right now it's at about 104.82. And if it breaks below that level, I'll be out of the trade, and everything will be fine, and I'll walk away with a good-sized profit. But if it keeps going higher, there's a potential for it to go up to as much as 117. At which point, I'd probably definitely be booking the profits at that point. But for now, all I'm going to do is just continue to increase the profit and allow that stock to run in my favor. And then another one here, just to show you how much you can really profit in the market, and excuse all of this craziness on my Apple chart here, but it's the markings of a true swing trader is when all your charts just have lines all over it from past trades. But here, February 9th, this was one of the best trades that I made all year, and it was just a really exciting trade. On February 9th, the market had been selling off, and I'll pull up the S&P for you to look at. The S&P had been just really getting tormented, and it had been selling off day after day, and people were thinking, oh man, this is the next 2008. It looks really bad. And then all of a sudden on February 9th, the market started turning around, and I saw a sharp bounce off of some key support levels. So I was going through a lot of the large cap stocks, trying to find the ones that were bouncing off a key support. And lo and behold, I find this one with Apple here where there's a support level that was going from all the way back in July of 2017, and it was stretching across, and it had bounced again in September of 2017, and now it was doing it again here in February of 2018. So I got long at about 151. So right here, and it was maybe a little bit of a risky trade, but the thing is that if I was wrong, okay, it would just break the day's lows and I'd be out for like a couple % loss. But it didn't. It just kept on going up and up and up. And the days that followed, it was just day after day where it was just really rocketing higher. And I ended up getting out on the 20th. And I'll show you which day that was. Right there. And I got out at 171.75. So I made like over 13% on this particular trade. It was great. And I could have probably even held it a little bit longer and eked out a few more gains. But at that point, we were getting some of these long-tailed doji candle patterns, shooting star candle patterns. And I just decided, you know what? I've made a good chunk of change on this trade. I'm going to go ahead and move on. But it was a great trade. And that just shows you what kind of moves that you can make as a swing trader that you can't necessarily make as a day trader. And sometimes a move like this is all you're going to get out of an entire year of price action of a stock, but you're taking advantage of an extreme low and then you're riding that bounce higher. So that's the magic of swing trading that makes it such a great option versus investing and day trading. So I hope you guys have been able to learn a little bit from this, and feel free to always hit me up via email, ryan@shareplanner.com, and I'd love to hear your questions, comments, or thoughts. And please join me in the Swing Trading Splash Zone too. It's a great place for traders to follow my own trades that I make and that I provide for everybody in the Swing Trading Splash Zone each and every day. And it teaches you how to be a consistent and reliable trader in the stock market. So thank you and have a great day. Thanks for watching. I hope you enjoyed the video. Please be sure to like and subscribe to my channel, as well as check out some of these other cool videos that I've done. And if you want to swing trade with me each and every day, you can do so by going to www.shareplanner.com/splash zone. Thanks and happy trading.